back to another Pathfinder fundamentals video. In this video, I'm going to specifically cover entry in the market using Pathfinder and what you've already learned so far. So let's go ahead and dive into it. We've already covered about our basis and how when you're above you're buying, when you're below you're selling. And we've covered the outer channels, the dynamics of how price responds with those, and how when price is moving and pushing the channel, we use that to mark up our levels of resistance in this case and support to the upside. So let's go ahead and dive into where the entries are. Well, the first and most obvious entry is when price is bouncing off of your basis. Now, what do I mean by bouncing off of? I mean when we zoom in and look at this, the market is pushing down and we have a wick. So we have a wick at the channel basis, which means the market pushed up, rejected, and then came back down inside of the price within the 1 minute, okay? That is and it's off of the channel basis right here, okay? That is the most basic, easy, simple sell entry in this case that there is, okay? So the first one is off of the basis when price is in a trend, not when you're in consolidation. So what you need to wait for is you need to wait for price. You can see this entire morning right here. This was in it's in inside the channel. This is in consolidation. Price is resting. Even here after this initial nonsense of 8:30, the market's not really doing anything. Then the market breaks out, which was actually what we call a liquidity grab. We'll cover that in another video. Market breaks out and then actually breaks to the downside. Okay, so now you've broken out of the consolidation and you have a direction to trade. Okay, so this thing starts to push. This is where, after it's starting to push, that's where you're looking for entries. Now, as I showed you in the previous videos, if it's a very strong trend, you will not get pullback entries to the line. So even though this is the easiest and most obvious one, you need to know where to get in when you're not there, when you're out in the middle of space, okay? Out here, this is the distance between your basis and your channel. We'll just call this space, okay? You need to know where to get in. So we covered going off of these previous support lines and resistance line. So in this case, what we're gonna do here is we're gonna back up. We see price push and it starts pushing our channel down. So what we're gonna do is we're gonna take our trend line. We're gonna come here to the long flat area, which was all the way from back here. This big 8:30 news wick is what created this. And we're gonna extend right. And what we're gonna do is when price comes back to this area and we see a candle with a wick where it rejects, we're gonna take that trade, okay? So right there, we have a candle with a wick right here, right at that level. So let's back up. So this was resistance, or sorry, this was support. It was broken. Now we're looking to see this test as resistance. This comes back, we see the wick right there, we take the entry, okay? That is your entry. And then you are looking for the continuation to the downside. We see some more wicks here, okay? That's what you wanna see. You wanna see wicks at your level. If price comes back and you don't get in on the first candle that wicks and you're like, well, let me wait, let me see. You may or may not get an extra entry, but if you see this and you see multiple wicks at that level, my goodness, take that trade entry. I don't care if it's even from down here and you didn't get in right at the line. It's not always going to be perfect. It's the level of resistance is what you're looking for. Okay, so you're looking for these wicks, or if it was on the flip side, you'd look for the wicks on the bottom. Okay, this is what you're looking for, and then you get the market continuation. Okay, that is your sell entry. Let's cover another one. Let's see what this market does as this pushes down, and let's see how this stuff plays out. So right here, this one touches it, and then you have a rejection candle. Do you get a candle with a wick? There wasn't really a wick on this one. We do have some wicks on this one, okay? So right here, after you get these two candles with the wicks, this is an entry zone right in here, okay? We want to see the market continue from this level. Now, this is a very important distinction, okay? The level that you're looking at, that you're marking up with these flat spots, it's not always just perfectly exact. What it is it's actually a zone. All right, you'll see this again and again. It's a zone. Where that zone really comes to is actually the candle that made the low, the high of that candle. So you have an entry zone. It's an entry zone. Sometimes it'll happen right around where that flat line was. It'll be almost perfect. Other times it pulls back a little deeper. But that's what you're looking for right there for a sell entry, okay? This market begins to push back from that level, and it's pulling back deeper. So it's a deeper pullback back into here. So if you were to take a loss at this level, for example, say you take this trade, pushes down, comes back against you, you stay locked in until you start to see the market invalidate by showing you what I showed you with the divergence, okay? This is still in a downward trend. You can see that it respected this previous high that made the low, okay? So it respected this level. So this is still valid to the downside. Still valid. All right, and we haven't covered stop losses or anything like that yet, so I'm not necessarily saying that this is a loss, but I'm just showing you, you're looking at this previous level from where the pullback was. It stayed valid. You could have stayed in this trade, okay? So we'll continue to press play here. This market is pulling back deeper, comes back and tests this level right here. And if you take a look at what level it's testing this again, right here. So that initial level of support, which flipped to resistance, that's the first test, okay? This is the second test, and it rejects again. So you have more entries here. Okay? Market comes back, tests a third time, and drops after the third test. Okay? Once it's tested 2 or 3 times, it's proven. That will be a catalyst for the market dumping lower. Now, if you're over here and you're looking at this, and that market flushes lower and you're looking for entries to get in, if you're still trading, okay? Let's say that you missed this, okay? And let's say you're looking for an entry. You need to look left and you need to mark up your levels of support, or sorry, the previous levels of support which got broken, okay? And you do the same thing. You look for wicks at those levels, okay? You look for wicks at the levels. So if you look here, this was a level right here, and I want you to look at the response of price on this. The market broke, came back up below, did not hold right here as resistance. So the market could have just continued from right there. It didn't. Instead, that market pushes up, and if you look, it acted like support twice. And then the market breaks it, comes back up, and if you look, it's the exact level right here that's getting tested again. So it was support, Market breaks it, comes back, 1 test, 2 test. Wicks, this is your entry. That's what you want to see right there. Okay? You're looking for the wicks at the previous area of support. That started back here, extended right, okay? Right here, more wicks. If you were already in this trade, add to your position. My goodness, look at these wicks right here at that level. Okay, remember, it's an area. It's not perfect. They could wick past, and then it comes back down in. That's another confirmation. All right? So that market wicks off of that level, big push down, and there is enough. There's enough ticks in that move alone that you're done for the day. Okay, just to show you from here down to here, 483 ticks. I think you're good. Okay, if you're not sure what that means monetarily speaking, if you were to get in up here at 1 contract, back down here to the channel lower is $2,360. I don't know about you, but that's plenty of money for 1 day's worth of work. And it was accomplished here in a matter of 32 minutes. So you made more than a lot of people make in a week in 32 minutes because you're patient, you look for good opportunities, you look for the wicks, and you take those trades, okay? All of this is based off of support, that flip to resistance. We see the market test it, break it, come back up, test it, 3rd test. Just like here, it's the same thing. You have test 1, test 2, test 3. After the 3rd test, drop. This is test 1, 2, 3, drop. Okay? You don't always get 3 tests. In this scenario, there was 3 tests both times, and then the market continued to the downside. Okay? Those are your sell entries. Those are your sell entries. Let's look for some buy entries. Let's take a look here. Here's a pretty simple one. Yeah, let's look at this. Markets are dynamic, okay? They're dynamic. All right, right here we have consolidation. So let's say we want to see where this is. So we extend we'll use a ray. You can use your trend line or a ray. Remember, when you hold down your trend line, hold shift so that way you can get it perfectly flat, okay? I'll just use a ray for this example. Oh no, we can use the trend line, it's fine. So right here, market makes a high. You have your channel high. In here, you had your channel low. Okay. Market breaks out to the upside. You're looking at this, your alert goes off. You're looking for an entry. Your entry is on this candle right here. This is a double confirmation. How is it a double confirmation? Go ahead and type in chat right now, guys. How is this a double confirmation? What makes this a double confirmation? There's 2 confirmations on this trade right now. Type it in chat. 2 confirmations. The first confirmation, a bounce right off of the basis. It's a bounce right off the basis. The second confirmation, it's a rejection, a bounce off of the previous resistance level. So this was resistance. Okay. It was resistance here. And then right here, we're about to see this. It got flipped. So from this level right here, this was resistance. And then right here, it flips to potential support. So the market comes back and it tests this level as support. Okay, so it tested the basis, which was the move back into the consolidation area. So this whole area right here is your consolidation area. Touches the basis in consolidation. So it touches our line. That would be an entry in of itself. But it also is wicking where the previous resistance level is. So that right there is your entry. Okay, let's juice this up a few contracts. Hit this for 3 contracts. And the market pushes up here at the height. That was $2,000. Okay, for 3 contracts. If you took 1 contract, $695, $700. If you have a $500 target for your 50,000, or you're just multiplying that for whatever your account size is, you hit your target in that trade, you're done for the day. You got everything you need to get in that one move right there. You don't need more than that, okay? So that's that trade off of that level. The market comes back, tests that level again, bounces, and then now we can see it comes back in and touches underneath again. From there, market came back to this level, and if you look, if you have this marked up right here, this previous high, the market is coming back, and if we test the fixed range volume profile, do you guys remember how we talked about the market moves, pulls back, consolidates? If we mark up that consolidation to breakout right there, watch this. Look where the market comes back to and tests. Right there, the market touches our point of control. Okay, so this was a breakout, pulls back to the POC, the point of control. That right there is the third and most advanced. Okay, it's the third and most advanced because it requires another level of
attention,
understanding where the consolidation is, how to mark it up using your tool here, fixed range volume profile, which I'll have another video that shows you how to do this. You can mark that up, and when the market comes back and wicks off of that level, that right there is your entry, and they are the best entries. You can see here 3 contracts, buying, and you can watch the money flow into your account from those levels, okay? Market comes back, tests, drops, breaks, starts doing something else. This ran for a total of $4,170 from that point of entry. Okay? So those are your simplified entries on buys and sells. Do you guys want to cover a few more? Do you want to cover a few more so you can really see this? Let's do a couple more. Okay, right here, buys. This market doesn't quite come back to this one. It pulls back, but it's not all the way to the line. You're going to have that. You are above the previous level. See all these wicks right here? That's what you look for. You take your buy off of that level right there. That's the support level to the upside, okay? Right here's your next one. You see pullback, you see the wicks right here. Those are entries in there, although maybe not as obvious. Over here, mark that up. Wick there, there's money to be made in here if you're willing to take the shot on those wicks, okay? Let's see, we have another one right here. Wick, back to the upside, okay? Right here, nice big wick, back to the upside. These are levels of support that you're looking for. It's the wicks, okay? In here, wicks here, that's money. Wicks here, that's money, okay? All based off of that previous level. All you have to do is when a breakout happens, look left. You're either gonna get the pullback to the basis, you're going to get a fake out to the downside. That's a money grab. Or the market's going to start to move and you can trade off of these, what were resistance levels, which flip to support levels. Okay? And you can hit those on the way up and the way down. And then you can do the same thing on the way down here with these moves. Mark up these levels. Okay? And these levels right here. You'll see here's level, here's level. Right here's a level. You can see the little discrepancy. That's a level right here. Wicks, 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 wicks right here. And then market breaks, and that's the pullback. Okay? This is where when it's pulling back and this is pushing down, that's your divergence and the move is done. And those are your Pathfinder entries. They can be enhanced using the HyperTrader. You can mark these levels up when price comes back to it. You can look for HyperTrader entries from those levels. Okay? When you become level 4 and you're more advanced and you understand the fundamentals of marking up the charts here, then you can go to that. So that's your video on simplified entries. Hope you enjoyed it. We'll see you in the next one.